When international conflicts erupt, the immediate casualty is the global energy market. Supply chains choke and crude oil prices experience sudden, violent spikes. India imports the vast majority of its crude oil supply, turning every international price hike into a massive, immediate economic shock. These expensive imports drain foreign exchange reserves and threaten the country's core infrastructure. If energy costs climb too high, industrial output stalls, and urban power grids face severe strain. To maintain basic energy security, the nation must pivot. It turns away from volatile imports and relies instead on its own domestic resources to survive. Curious tone, this global chaos creates a very specific local beneficiary. As expensive oil forces the economy to turn inward, Coal India Limited takes over as the primary stabilizer for the national grid. Coal India is a Maharatna public sector undertaking, a designation for the government's critical enterprises. By raw volume, it's the largest coal producer globally. During an energy crunch, the economy leans on this single company. Heavy industries, from cement and fertilizer to the massive steel sectors, run almost exclusively on Coal India's thermal output. While everyday consumers face financial pain at the gas pump, this geopolitical shift quietly funnels immense wealth to a specific group of Coal India investors. Because industrial demand for domestic coal is inelastic, the company operates with a high degree of financial certainty. Factories must buy the fuel regardless of international market conditions. The volume of cash generated is immense. By the fourth quarter ending in March 2026, Coal India's revenue jumped to 46,490 crores. This revenue trickled down to a staggering 75.7% year-over-year growth in quarterly net profit. Management efficiency remains high, with the company recording a 28.5% return on equity. The return on capital employed is even higher, sitting at 35.3%. Global volatility hasn't just protected the company's baseline, it has hypercharged its profitability to record-breaking levels. These massive corporate profits eventually leave the balance sheet and hit the individual shareholder's bank account. The company is known for aggressive dividend payouts, often returning between 42% and over 100% of its profits directly to its investors. This chart shows the current incentive for investors, a highly lucrative dividend yield of 6.14%. Foreign institutional investors and mutual funds are sensitive to these yields and have begun moving into the stock. Foreign institutional holdings have increased from 8.38% to 10.37% in the most recent quarter. These institutional investors are actively using Coal India as a high-yield hedge to protect their wealth from international instability. While the global narrative focuses on transitioning away from fossil fuels, geopolitical instability has positioned this legacy coal monopoly as a premier wealth generator. Despite its massive profit engine and its role in the national economy, Coal India still trades at a low price-to-earnings ratio of 8.55. In a modern portfolio, the stock functions as a reliable geopolitical shock absorber. The company's monopoly on domestic energy ensures that cash payouts remain reliable for as long as the global oil market is held hostage by international conflicts. The next time global headlines report spiking crude oil prices, watch the massive dividend checks quietly hitting the accounts of Coal India investors.